The market is volatile, the stocks keep going down. Then boom, we hit new highs. Everything is different now, but you don't gotta chase. Don't panic, don't stress. Time to realign, plan it out, invest. It's the First Fruits Podcast. We elevating with the First Fruits Podcast. No time for waiting, time to grow, give back, reinvest like that. Everything you need to know, the First Fruits Podcast. Let's go.
Welcome to another episode of the First Fruits Stock Club. Man, I hope you guys are having a wonderful week. I got a show for you today. Few topics. Man, Jerome Powell and Donald Trump are back at it again, fighting again. I discussed this last year and it's gone on again this year. We're gonna discuss that. Top performing stocks in the Dow Jones Industrial Average. Man, stocks are rocketing. I got a couple stocks and we're going to go over a lot of charts today, right? A lot of charts, what the market is doing. Man, I'm going to give you some points in the Dow, the weeklies, the S&P 500 and the NASDAQ. So we're going to go into it. Look, it does not matter what's going on around us. It does not matter what's going on around us. It is important that we have a system to go by. It's important that we are able to generate money for our families as traders, right? As owners of brokerage accounts, it is important that we always constantly, no matter what's going on, right? We need the ability to generate income for our family. And that's why generating dividends in a conflict or during conflict is important, right? I don't care what side of the aisle you're on, all right? It doesn't matter because nobody's going to come to your rescue for your family. So it's important that you pay attention and listen and invest during these times. And one of the best things I think is developing a dividend portfolio during a storm, right? Because what happens is, the stock market often goes through cycles, right? Sometimes growth is in at the current point, but sometimes it isn't, right? Therefore, we have to still find ways to generate money in the market, and that's why I developed the First Fruit Stock Club portfolio and strategy for times like this, right? Times like this. So there is something we have to look at it and we have to understand how things are designed in this country, right? And you have to look at the designing of our financial system and what it is in regards to making and generating money, right? And this will make you a better trader when you understand this, all right? So we have something in regards to how we keep track of what we generate as a country, something called GDP, right? Gross domestic product. And we have a formula for it, right? You have consumption, right? You have business investment, you have government investment, and then you have imports and exports. All these different segments create what's called GDP, right? We have the largest GDP in world history at $30 trillion. There's no other country ever that's generated $30 trillion in GDP, right? So therefore, that is why it's important that you invest in the market, right? But getting back to that GDP. But when you look at GDP and you look at the segments of it, consumption, what people buy, makes up 70% of GDP. 70%, that means people buy things. And you say, well, I can buy what I want. No, you don't have a choice to buy things, right? All right. For example, if we have a car is a consumer item, of course, but it's based on a whole bunch of systems that make you have to keep buying, right? Think about it. You have a car, you need new tires. Tires, you need more gas, right? More gas, you have maintenance. You need more maintenance, and all these different things go up over time. That is why it's important that we invest not just strictly for retirement, but we're investing for our personal needs, and also we invest for income, right? We invest for lifestyle, right? And how we invest for a lifestyle is by developing a portfolio through what's called a brokerage account, right? We all have them. I mean, if we don't all have them, I'm saying, but we're aware of them. But the fact is that only 40% of Americans have brokerage accounts, right? So when we look at some of the statistics about Americans, it's because that majority of people don't have brokerage accounts, right? Brokerage accounts allow you to keep up with inflation in those inflating items, tires, gas, maintenance, all those other things. Those are just some of insurance, right? The cost of insurance. It's crazy, right? You have to keep up with those things. Investing for lifestyle allows those things not to totally destroy your budget and destroy your lifestyle. You get a chance to continue to do things as you want. And because nobody's coming to save you, and it's up to you, right, to invest. So I developed the First Fruit Stock Club and formula, and the first is the First Fruits budget, which says that our first dollars are used to fight inflation. Right? Inflation is one of the biggest bullies out there. Right? The first dollars are for you to fight inflation. Right? Fight back. Cost of tires, cost of gas, and that's just one consumer item. We got housing, right? Cost of food going on. You have all these things going against you and fighting against you and making you swim upstream. But guess what? And it's very hard for the average person to be profitable in this economy. Therefore, how do we do that? We do it by becoming investors, and not just investors where we want to buy a whole portfolio, but we also want a monthly income portfolio. And that's what we need to do to generate profits. We need that monthly portfolio. We need the long-term portfolio for us, right? And we also need, I think you should also, if you have a brokerage account, you should know how to buy options. Now, options carry risk. All of this investing in the market carries risk. All right. But it's also carries risk of the dollars that you make, you're gonna have to make double in the next probably 10 years to keep up your same lifestyle. All right. So it's important that we find ways and we do things, right? We do things in a way. And one of them is, yes, developing a dividend portfolio in the storm. These are the times for it. So let's go into it. Man, I ask you guys, please like, subscribe, and share. Okay. Like and subscribe and share. Share it with friends and family. This is great information. There's a lot of nonsense online. And yes, sometimes I look at nonsense, man. We all need a good laugh. The internet is undefeated in laugh. But we also need to take our financial lives to the next level. This is an opportunity for you to do that. Like, subscribe, and share this with your friends. So today's So let's go into it. So today, Dow Jones Industrial Average down 42.36 points, SP 500 down 37 points, and the NASDAQ down 238 points. I think it was close to 400 at one time today. All right. So we look at the Dow Jones Industrial Average, and we look at it bounced off the weekly, which is it's a good sign, right? Bounced off the weekly low was 48,889.71. So it bounced off the weekly low. So that's what we want, and we hope that it continues. But with the conflict going on, we don't know, right? Let's go. S&P 500. Once again, we look at the weekly, right? It actually fell below the weekly. Man, spider. Fell below the weekly, and It fell below the weekly, and but it bounced again. Like with everything else, it bounced again. And even the NASDAQ, right? The NASDAQ, it fell below the weekly. We always want to watch the weekly, right? The weekly kind of gives us a determination of how the market, if the market's going to bounce. If it goes below the weekly, right? Then it goes. Remember, I always say the stock market is a time machine, right? It can go forward when it's positive thinking, and it compounds forward positive thinking and discounts backwards when it's negative thinking, when it thinks that the economy is not doing well or the stocks are maybe overvalued. That's what happens, right? So, so in the news, collecting dividends during conflict, Trump and Powell cutting rates. Man, I did uh, a show on this at last year when this first started, this conflict first started, in regards to rates, in regards to trying to Donald Trump's whole purpose is he wants lower rates, which is understandable. Is very tough for a new homeowner to buy a house right now. The cost of housing is crazy, but also the interest rates are crazy also. And so you're going to pay double to triple what you're going, what someone will pay, back in 2020 in regards to the cost of a mortgage. I think it's like 50% more in regards to cost of an existing home, right? And the cost of a mortgage is like double. I mean, it's crazy. So the average person can't, really afford those prices. I mean, not average person, but someone, a new family, young family, just trying to buy it. It is very, very hard right now. So I understand, um, uh, but he's done a lot of things, right? As well as uh, he's also decided to um, require Fannie Mae to go into the mortgage-backed security market and buy mortgage-backed bonds. And that would happen. What that happens makes it more liquid and to reduce rates. And that worked for a few days. And I didn't put I don't know what rates are at right now, but rates definitely did lower when he did that. So and also another thing that he did was he wanted to limit um, he wanted to limit large companies from buying single family homes, large institutions, which was doing, but institutions only make up a small percentage of single family homes. So it's not really going to make a dent. But the biggest thing is, man, how do we in relation to price and rates, what is the happy medium? You really don't know because if we start to lower rates, which is going to happen, right? When Trump gets his appointee as a Federal Reserve rates, we will see what's going to happen with the price of housing, and demand will go up. And anytime demand goes up, right? I mean, anytime uh, prices come down or rates are come down, meaning more people, demand is going to go up, right? So that means more likely the price of housing is going to go up. All right, so we'll see. We have to keep our eyes and ears open of that with these different things going on. And also, one other financial thing is going on is he's putting a cap on credit cards, right? So that's a good thing. 30%. But then again, there's positive and negatives to every financial move. There's not one thing that's going to happen. And and I don't use credit cards, but I know a lot of people have to, and but there'll be less lending, right? Because they say that majority of those the rates they lose like 5% of the credit cards. People don't pay them back. So the rates kind of keep up with that. I don't, that's what that was reported. So we'll see. We'll see what happens with that. But it's only capped at for 1 year. So after that year, it's gonna be like a springboard in regards to rates and credit cards. It's not funny, but I can just see that happen. It's like anything else. Unless you're gonna do it for a long term, I don't know if I mean, I guess for a year, that'd be great. Give people a year. But after that year, I mean, during that year, you better do everything you can to pay off those credit cards because after that, it, those rates gonna go berserk. I can just see that now. That's how financial markets work, right? And if it takes them a year, when it comes to that year and opens back up again, oh yeah, the floodgate's gonna open in regards to credit cards. So we'll see. We'll see with that. All right, so let's go. Man, last week I with the oil conflict in Venezuela, there was I highlighted two stocks. That's two of the largest big oil stocks in the S&P 500. Was ExxonMobil. I do own Exxon in one of my dividend portfolios. And what I wanted to point out is that it was building um, uh, a strong foundation, and it just broke out. Right, broke out, hit an all-time high of $130. So Exxon is a stock. Also, before I get into that, let me do this. Disclaimer: the information provided in the First Fruit Stock Club podcast is for educational and informational purposes only and should not be considered financial, investment, tax, legal advice. The views expressed by the hosts are their own and do not reflect the opinions of any financial or regulatory authority. Investing in stocks and other securities carries risk, including the potential of loss. Principal past performance is not indicative of future results. First Fruit Stock Club and its affiliates do not guarantee any investment or outcomes or returns. By listening to this podcast, you acknowledge that you are responsible for your own investment. So, getting back to where we were, ExxonMobil, right? But look, let's go into um, the Dow Jones Industrial Average. You know, the stock market kind of goes through its phases, right? Stock market goes through its phases, and one of the phases it goes through is, you know, it will, you know, technology will lead the way, and I definitely think that technology will lead sometime this year. But right now, we're more of what I call a hawkish companies leading hawkish money. When I say hawkish, I think companies that develop hard materials and do the hard things in the economy, right? And you know, where you have to touch and feel, where technology, I think, is more asset light. These companies are more at what's called asset heavy, right? And not all of these companies, but just a few of them. So Sherman Williams, stock I'm going to highlight, as well as Home Depot, right? You have Boeing's another um, asset heavy company. Caterpillar, definitely asset. Man, I recommended Caterpillar last year, beginning of this time last year was one of my top stocks, and it's been on a tear. Amazon is up this year, like Amazon this year. Goldman Sachs, do not own. I have traded Goldman Sachs, but I do not own Goldman Sachs in my bank portfolio. I probably need to add that. Chevron. Chevron is a company that I own in my portfolio, and Honeywell. I do not own Honeywell, but I do own Home Depot. Do not own Boeing. All right, so let's go to the next. All right, so Home Depot versus Sherman Williams. I decided to kind of go into these stocks a little bit and just more go into the charts. You know, Sherman Williams, man, if you look back, and one thing they became included in the S&P 500. They were added last year, and then since January, look at that chart. Look, that's a thing of beauty. You know, it took a little dip, you know, but man, it hit that and took off. All right, so so you know, Sherman Williams has been a stock that's been on a tear since the beginning, since the end of last year. So you want to think about adding that to your portfolio. Like I said, it was added to the S&P 500. You know, for the S&P 500, there's a whole formula, right? The stocks in regards to earnings and market share they have to have. And Sherman Williams hit those metrics. All right. Home Depot was another one. Look at the beginning of the year. Get busy at the beginning of the year, took off. And man, it's another one. Thinking about adding to your, I own Home Depot, looking at buying more shares through the year. So yeah, Home Depot, when you look at these two companies, I know they're not sexy and Sherman Williams, Home Depot and one of the Home Depot profit centers. Yeah, I used to be a real estate investor, but one of their main profit centers is their Pro Desk. If you don't know, if you're not a real estate investor, a lot of people don't know that they have what's called a Pro Desk. And their Pro Desk is if you're a pro member, that means usually you're spending, twenty to $50,000. And those are usually people who are investors, right? They buy properties, they rehab properties. I used to buy and rehab and bring properties back to life, either to sell or to rent out. With the pro desk, are people who really buy in bulk. They're not like the weekend do it yourself people, consumers. They're usually investors or people who have large projects that they're going about. So Home Depot is that's a little profit center of that. Sherman Williams, what I didn't know Sherman Williams. Little key about Sherman Williams is that they not only do consumer paints, they also have a business side to the company where they do boating, they also do car paint. So they develop a lot of relationships with painters, but mostly is with contractors, right? Most majority of the relationships contract. All right, so I know those two aren't exciting companies, but in the environment that we're in the conflict, there are companies that have been performing. So my goal is to bring you some companies that are performing. I think technology is gonna come back, but as I'm showing you right now, I'm getting beat up right now. Um, you know, options is not for the weak of heart to show you Palantir, and my Palantir option is down 80%. Vertiv is down 74%, and Netflix is down 4. My Netflix, January 20th is they're reporting earnings. So I think the Netflix has a big chance of coming back. And if you don't trade options, options can be down 50% at a time. So you often have the decision, right? And when it gets down like that, do you add more contracts, right? And that's the whole process of having a dividend portfolio. You can add contracts. And then when the stocks perform, these aren't performing right now, but I've had stocks perform. Let me tell you, these stocks were performing, but I decided that I wanted to hold these through the end of the year, which I should not have. Bad decision on my end. Usually these stocks were up 30 to 70 to 100+% at one period of time, and I've been holding these for a while. These options for I just want to hold them through the year and see what happened. And yes, I have learned what happened, and I'm going to go back to my strategy of taking profits off the table. I should have taken profits off the table, but that is the game of investing, right? That is the game of investing. Look, I appreciate you guys. That is basically it for today. I appreciate you guys giving me a few moments of your time. I just want you to know that this is the second time I recorded. The first time I recorded, nothing recorded. It was crazy. It's crazy. Look, I just want to let you guys all always to know is that please, 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 all right, like, subscribe, and share my channel. Some great information, some great picks I gave just last week. Stocks that I highlighted already hitting new highs. Okay. So I just say that, man, we have to invest our money, right? And it's the best way for an average person to gain wealth in this country, which is the best economy in world history, right? Which is the largest stock market in the world. You have access to that, right? You have access to that. And what happens is that if you don't access what you have, it can easily be taken away from. You. Meaning, if you have monies that you're consuming, right? And I discussed GDP that 70% all um, of all profits that are made in this country are from consumption, people buying things, right? Use up all your capital to buy things, and you don't put your money in the market. When inflation comes, and don't believe that this is the end of inflation, okay? When inflation comes, then you're gonna look back and you'll be like, man, what happened to the money I used to make? What happened to it? Inflation happened, right? Taxes happened, recession happened. Those things are bullying, right? They're the bullies of this economy. And the only way we can fight back is man, becoming investors, investing in the stock market, not just for retirement, but for a lifestyle, right? Become an investor, right? And I don't want to, $5,000 to $10,000 won't be a lot of money to you. You decide to invest. All right. All right. You can do that any period of time in the market. You may think it was a lot of money, but if you follow the formula that I have, right, that I set aside, it won't be a lot of money to you, right? And I'm not saying it's cheap chump change. I'm not saying that you throw it away. I'm just saying that you will have the opportunity to participate in a $51 trillion. So 51 trillion, you can get $10,000, $5,000 from that market. All right, from the market. It's up to you. All right, it's up to you. All right, so man, once again, thank you guys for joining me for another. I'm Donald Green, the founder of the First Fruits Stock Club. Man, be fruitful. Until next time. Thank you.
The market is volatile. The stocks keep going down. Then boom, we hit new highs. Everything is different now, but you don't gotta chase. Don't panic, don't stress. Time to realign, plan it out, invest. It's the First Fruits Podcast. We elevating with the First Fruits Podcast. No time for waiting, time to grow, give back, reinvest like that. Everything